Viewers at home, you are welcome to my presentation on incomplete records and single entry. In this presentation, I will give the general overview of single entry and incomplete records. I will also examine the information that will be provided in single entry system and incomplete records. I will as well consider the examination requirements of incomplete records. I will give the procedure for solving an incomplete records questions. I will give the format for solving the relevant account in an incomplete records questions. I will as well give a standard work example. I will solve a standard work example. If this is your first time of coming across this YouTube channel, or if you have not subscribed in the past, please click the red subscribe button and turn on the notification bell icon so that you'll be able to receive a notification message each time I drop a new video. If you are a returning subscriber, I say thank you and God bless you. What do we mean by single entry system? Single entry system. Single entry. The word single mean one. Single mean one. Why entry mean to record? To record. You know, the accounting principles, the principles of account is the principles of double entry. Any accounting principles or system that is not in line with double entry is said to be the single entry system. I've said a single entry system is an accounting system that does not conform with the double entry principle. An accounting system that is not in line with the principles of double entry is said to be single entry system. On the other hand, an incomplete records, incomplete records is a situation. An incomplete records is a situation where there are hardly any records at all. A situation whereby there may be no any record at all, or the record kept are not enough to prepare the statement of profit or loss. I said an incomplete record is a situation whereby there may be no any record at all, or there may be records, but the records available are not enough to prepare the statement of profit or loss. That means there may be no record, or in some occasion some records will be provided, but those records that will be provided will not be enough to prepare the statement of profit or loss. That is incomplete records. It is the lack of enough information that make it impossible to prepare the statement of profit or loss, because the information are not enough, and because of lack of those information or lack of enough information that make it impossible to prepare the statement of profit or loss. What are those information that will be provided in an incomplete records questions? Available information. Available information. I've told you that there may be no records at all, or in some cases there will be records, but these records will not be enough to prepare the statement of profit or loss. So in an incomplete records question, you'll be given the following: assets and liabilities at the opening date. Assets and liabilities at the opening date. Assets and liability at the opening date may be provided. Number 2, you may be given the assets and liabilities at the closing date. I'm considering those information that we will be given in an incomplete records, not single entry. I've told you that in an incomplete records, there may be no information at all. But in some cases, there may be information. But those information will not be enough to prepare the statement of profit or loss. Number 3, you may be given the drawings. Drawings may be given. Number 4, you may be given information about additional capital for the period. Additional capital for the period. These are the information you may be provided in an incomplete records question. So anytime you are given this information, you know that the question involves an incomplete records, or the question is an incomplete records. The following information will be absent. The following information will be absent. Absent of, meaning that this information will not be given in an incomplete records. Number 1, you will not be given the cash transactions. You will not be given the cash transactions, such as cash received from customers, cash received from customers. This will not be given. So you will not be given the cash paid to suppliers. Cash paid to suppliers. You may not be given the expenses paid by cash. Expenses paid by cash. But this information will be provided in a single entry system. This information, I've told you that they will not be given in an incomplete records, but they will be given in a single entry system. So in single entry system, you'll be able to prepare the statement of profit or loss. There will be enough information that will enable you to prepare the statement of profit or loss. But in an incomplete records, I've told you that there may be no records at all. Or in some cases, the records that will be available will not be enough to prepare the statement of profit or loss. So, but if this information will not be there, I've told you that this information will not be available in an incomplete records questions, but they will be given in a single entry system. What are the examination requirements of incomplete records? Examination requirements. What will you be required to do? Examination requirements. In exam questions, what will you be required to do? You will be required to. You will be required to do any of these. Any of these terms may be used. You may be required to calculate, or they may say ascertain. In an incomplete record question, any of these terms or words may be used. Ascertain, or you may be asked to estimate. Estimate. You may be asked to determine. Determine. You may be asked to find the profit or loss for the period. That is, the examination question will require you. Examination question will require you to calculate the profit or loss for the period, or to ascertain the profit or loss for the period, or to estimate the profit or loss for the period, or to determine the profit or loss for the period, or find the profit or loss for the period. The question will not say prepare statement of profit or loss. It will not be prepare statement of profit or loss, but it will be calculate the profit or loss. or ascertain the profit, not prepare the statement of profit or loss. So those are the examination requirements of a single entry system. What are the procedures for answering examination questions involving an incomplete records? Procedures. So procedures for answering examination questions involving an incomplete records. Incomplete records. I will still consider the single entry. Number one, prepare the statement of affairs. Prepare the statement of affairs as at the opening date. As at the opening date. The opening date. In order to ascertain the opening capital, you prepare the statement of affairs as at the opening date to ascertain the opening capital. I will still explain what that means. Step 2, prepare the statement of affairs as at the closing date. Prepare the statement of affairs as at the closing date to ascertain the closing capital. To ascertain the closing capital for the period. So that means 2 statements of affairs shall be prepared. The one for the opening date, statement of affairs, the first one for opening date, another statement of affairs for the closing date. What do you mean by the statement of affairs? Before I move to step 3, I want to consider what statement of affairs mean. Statement of affairs. What does that mean? If you take a sheet of paper, let's assume this is a sheet of paper. You now put carbon paper under it. You also place it in between. That is, you put 2 sheets of paper, and you put carbon paper in between it, and you are now writing on the front page. The same thing you are writing on the front page will be duplicating on the second page. So, meaning that statement of affairs is the carbon copy of the statement of financial position. The carbon copy of the statement of financial position. When you copy it on carbon paper, the carbon copy of the statement of financial position is said to be the statement of affairs. What do we mean by that? You know, in your statement of financial position, which is your balance sheet, there are 3 elements that will be there. The number 1 is assets. 3 elements that will be recognized in the statement of financial position. The first one is assets, the second one is liabilities, and the third one is equity or capital. These are the elements that will be recognized in the statement of financial position. These are the elements that will be incorporated in the statement of financial position. Same element will be incorporated in the statement of affairs. That means the same thing you have in your statement of financial position is what you will equally have in your statement of affairs. So that is why I said it is the carbon copy of the statement of financial position. So, meaning that if you look at the concept of capital maintenance, which is accounting equation, we used to say assets equal to capital plus liabilities. if you look at the reason for preparing the two statements of affairs outlined above is to ascertain the capital. The first one to ascertain the opening capital, the second one to ascertain the closing capital. So that means in your statement of affairs, you want to ascertain your capital or your equity. So if you want to ascertain your capital, I will say asset plus equal to capital plus liability. Therefore, if you make your capital the subject of the formula, then you will have capital equals to assets, bring liability at the right hand to join asset at the left. The plus become minus liabilities. Your capital equal to assets minus liabilities. Your capital is the same as your equity. Assets minus liabilities. That is capital. That means you have your statements of affairs. Statements of affairs. I've told you that the element that will be recognized in the statement of financial position are those elements that will appear or that will be incorporated in our statement of affairs. So that means you are going to have assets. Assets which include the non-current assets. And non-current assets will have plant and equipment or plant and machinery. Then we have land and building. Land and building, you have the motor vehicles, you have furniture and fittings. These are non-current assets. Then you may also have your current assets, which include inventories, your trade receivables, trade and other receivables, your cash at bank, your cash in hands, your prepaid expenses, so when you sum up all this, you have the total assets. If you have any other assets, then you equally consider them. That is total assets. After total assets, if you look at the definition, I said capital equal to assets minus liabilities. That means you will need to less liability from your assets in order to get your capital. So we now less liabilities. Your liabilities include trade payables, your bank overdraft, your accrued expenses, and other liabilities you may be given. When you sum up your liabilities, you have these as the total liabilities. Now you put it in the same line with your assets. You now subtract your liabilities from assets. The difference is your capital, which is capital. That means you are going to prepare it for the opening entry at the same time for the closing entry. The one for the opening entry will be used to arrive at the opening capital, while the one for the closing entry, or you use it to arrive at the closing capital. Remember, I've told you that you prepare the statement of affairs as at the opening date in order to arrive at the opening capital. Then you also prepare the statement of affairs at the closing date in order to arrive at the closing capital. So after preparing your statement of affairs, you have arrived at the capital, the opening and the closing. Then step 3. Before proceeding to the third step, so I want to explain what opening entry and closing entry mean. In some question, you may be given 2022 and 2023. Any transaction you see under 2022 is opening date, that is opening entry, while the one in 2023 is the closing date or closing entry. So, meaning that it is those one you have under 2022 that will be used to ascertain the opening capital, while the one under 2023 will be used to ascertain the closing capital. In some cases, you may not have the opening date first. You may be given 2025 and 2020. You may be given and 2024. This is the closing date. And this is the opening date. That means it is the information under the 2024 that will be used to ascertain the opening capital, while information under 2025 will be used to ascertain the closing capital. This is the closing entry, and these are the information under this are the opening entry. Now back to the equity. Sometimes you may be given the same year, maybe 2025. Maybe that is the year that is involved. You'll be given January and December. The January is the opening date, while December is the closing date. Please take note of that. Now, back to step 3. Step 3, you prepare the profit statement. Profit statement. Profit statement, you prepare this to ascertain the net profit or net loss for the period. Now, what are those information that will appear under this? Under the equity section of the statement of financial position, owner's equity, that is of your balance sheet. Under owner equity, you used to start with capital, but I want to call this capital opening capital. Opening capital. Then if you have additional capital, you add it. Additional capital. In a nutshell, you are starting with the capital. Additional capital, AC, additional capital. You add it. Then you now add net profit. And if it is loss, you less it. You add the net profit, you have this as the total. Net profit, NP. Then you now less drawings. D. After this, you get your closing capital. Closing capital. Closing capital. That is your balance sheet. The equity section of your balance sheet, that is of your statement of financial position. The first thing is your capital, which is your opening capital. You add additional capital, if any. Now add net profit, and if it is net loss, you less it. You less drawings, you get your closing capital. Closing capital, CC. So in a nutshell, in summary, your equity section, you are starting with opening capital, which is OC, plus additional capital, plus net profit, minus drawings, less drawings. Then you get closing capital. Remember, what you want to look for under this profit statement is your profit or loss. So that means you want to look for the net profit. So now, let's make the net profit the subject of the formula. So we have net profit equals to closing capital. Take this to join it. This minus become plus. That means we have plus drawings. Closing capital plus drawings. Take this to go and join the CC. This is plus OC before. It becomes minus OC minus opening capital. take AC to go and join CC as well. This plus becomes minus AC, which is additional capital. That means to ascertain the profit or loss for the period, your net profit will be closing capital plus drawings minus opening capital minus additional capital. Now let's now put this format in the statement form. Then we have the profit statement. Statement showing the profit or loss, the name of the entity, name of that entity. First, statement showing the profit or loss for the year ended. You have to put the date. So, I've told you that your net profit will be closing capital plus drawings. Now, let's put down the closing capital. We have closing capital. We add drawings. Then, having considered the closing capital and drawing, we less opening capital, we less additional capital, AD. So we need less opening capital and additional capital. So less opening capital. We also less additional capital. Then, when you less that, you have the net profit or loss. Net profit, if it is positive, or net loss. If it is negative, that is net loss. That is the format for ascertaining the profits or loss of the proprietor under incomplete records. So I therefore want to solve a question as work example. Now the question. We have Florence is a sole trader who does not operate a full double entry system of bookkeeping, but the records he does keep are accurate, and from them the following figures have been extracted for the year 22X. We have January 1st and December 31st. The first item is inventories. The one as at January is 185,000, and the inventory as at December 31st is 200,000. We have cash at bank, 56,000 and 98,500 for January and December respectively. Trade receivables, 90,000 and 100,000. Office equipment, 400,000 and 450,000. Then we have furniture and fittings, 29,000 and 40,000. Then motor vehicles, we have 740,000 and 955,000. Then trade payables, 158,000 and 250,000 respectively. Then we have the following transactions took place during the year. The first item is we have one, the debt of $6,000 is to be written off as bad debts. The debt of $6,000 is to be written off as bad debts. 2, rent of $50,000 was prepaid, and insurance of $6,000 were owed by Florence. 3, additional capital of $10,000 were provided during the period required. Prepare the statement that shows the calculation of profit or loss of the business for the year ended December 31st, 22x. That is the question. I've told you that whenever you are given questions involving an incomplete record, the two statements of affairs shall be prepared. The one for the opening and the other one for the closing. Now, the name of the entity is Florence. Florence. The first thing is the name of the entity. Florence. We have statement of Florence, statement of affairs. Statement of affairs as at the 1st of January. You want to prepare the statement of affairs as at the 1st of January and December 31st. Now, you start with the assets. The first assets we have is inventories. The opening one, we have inventories. The opening is 185,000. And the closing one is 200,000. Then we have cash at bank. Cash at bank. The opening is 56,000. While the closing is 98,500. Now, before we go further, please let's look at the additional information. We have the debt of 6,000 is to be written off as bad. That means the bad debts of 6,000 will affect the receivables. Part of the receivable have been declared bad debts. So that means you are going to subtract it from the closing balance of receivables since it occurred during the period. Then you also have rent prepaid. Rent of 50,000 was prepaid and insurance of 6,000 were owed. And we have additional capital. So it is only the receivable that is affected by the footnote. Then we have trade receivables. Trade receivables. The opening entry is 90,000. And the one in the closing is 100,000. 100,000. That is what you have in the closing. 100,000. I'm not recording the 100,000 here because you were told that 6,000 is bad. If 6,000 is bad, you have to subtract. You have to remove the bad debts from that. So minus 6,000. Minus 6,000. Then you'll be left with 94,000. Then we have office equipment. So we are not using the order of permanency. This is not a conventional statement of financial position. If it is conventional statement of financial position, you have to start with the non-current assets first, followed by current asset. So if you like, you may still start with the non-current asset before the current asset, but just pick all the assets. That is what is important. Then we have office equipment. Office equipment, and there is no depreciation in the footnote. Office equipment of 400,000. If there is depreciation that is charged during the year, that means you have to remove that depreciation from the closing balance, but there is no depreciation, so we have 450,000. Then after office equipment, we have furniture and fittings. Furniture and fittings. Furniture and fittings. No depreciation charge during the year. The opening balance is 29,000. 29,000. while the closing balance is 40,000. Then the next one is motor vehicles. Motor vehicles. The opening balance of motor vehicle is 740,000. 740,000. While the closing balance is 955,000. 955,000. Then the next item is trade payables. Trade payables is a liability. This is a liability. Now let's check the footnotes to know if there are any other assets to be considered before liabilities. Note 1 is a bad debts which shall be considered. Note 2, rent of 15,000 was prepaid. Prepayment is an asset. Rent prepaid. Since it was prepaid during the year, that means it will relate to the closing entry. Now, the note 3 is additional capital. So now you can now cast, in order to sum up the asset, what is our total asset? Now let's add it up. We have the first one. We have 185,000 plus 56,000 plus 90,000 plus 400,000 plus 29,000 plus 740,000. The total of the opening balance, the total asset now is 1.5 million. Total assets. The opening balance is 1.5 million. Then the closing balance, we have 200,000 plus 98,500 plus 94,000 plus 450,000 plus 40,000 plus 955,000 plus 15,000. Then we have 1,852,500. 1,852,500. That is the total assets. From the total assets, we less liabilities. We less our liabilities. Our liabilities include, we have the trade payables. Trade payables. The opening balance is 158,000, while the closing balance is 250,000. 250,000. Then let's check the footnote. Note 1 is bad debt which has been considered. Note 2, we have rent of 50,000 was prepaid. Prepayment is an asset, and that has been considered. And insurance of 6,000 were owed by Florence. Insurance owing is a liability. Insurance owing. Insurance owing. Insurance of 6,000. Insurance of 6,000 were owed. So since it was an owing during the period, to be treated in the closing entry. These are the liabilities we have. So you now subtract the liabilities from the asset. So when you subtract the liabilities from the asset, you have the capital. So our capital now, so if you subtract 158,000 from 1.5 million, then you have 1,342,000. 1,342,000. Then we also have a 1,852,500 minus 250,000 minus 6,000. Then you have 1,596,500. This one is the opening capital, and which is 1,342,000, and the closing capital is 1,596,500. Then the next thing is the profit statement. So you want to prepare the profit statement. We now have Florence statement showing the calculation of net profit, showing the calculation of the net profit or of profit or loss for the year ended December 31st, 22x. So we want to show the net profit or loss of Florence. Now go by the format I have given to you. The first thing is the closing capital. Closing capital. Our closing capital is 1,596,500. 1,596,500. Then to this capital, the total. So by the time we subtracted the 250,000 and 60,000 and 6,000 from 1,852,000, the closing capital will be 1,596,500. I'm correct. 596,500. That is our closing capital. The closing capital. Then you add drawings. You add drawings during the period. Add drawings. The note 4, additional information number 4. The monthly drawings by Florence were goods 300, cash 500. Monthly mean every month. No, there are 12 months in a year. So we have drawings. That of goods, that is inventories or goods. And that is 300. 300 times 12 months. That will give us 3,600. Then drawings by cash. 500 monthly times 12 months in a year. That gives us 6,000 as well. Therefore, the total drawings is 9,600. 9,600. By the time you add your drawings to your closing capital, then you have 1,606,100. 1,606,100. Then the next thing is to less the opening capital. Less opening capital. Opening capital. Our opening capital from the opening statement of affairs. Our opening capital is 1,342,000. 1,342,000. That is our opening capital. 1,342,000. 1,342,000. Then we also consider additional capital. That is in note 3. Additional capital of 10,000 were made during the period. So I've rubbed up the remaining part. So we have additional capital of 10,000. Additional capital from note 3. Additional capital of 10,000. 10,000. If you add the opening capital of 1,342,000, an additional capital of 10,000, then you have the total of 1,352,000. 1,352,000. You now subtract 1,352,000 from 1,606,100. 1,606,100. If you subtract that, then you have 254,100. That is the net profit for the period. Net profit. So we have the net profit. That is the end of part 1 of my presentation on single entry and incomplete records. Part 2 shall cover the preparation of financial statements from single entry. So whereas this one is incomplete records, part 2 shall cover single entry, where you are going to prepare the statement of profit or loss from a set of single entry questions. Thank you. Be expecting that.